My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to save you some money. My job is not just to entertain, but to educate, teach. So put it in context. Call me, 1-800-743-CNBC. Tweet me at Jim Cramer. The last couple of weeks have been way too binary for this guy. Either everything's going great,
House of pleasure,
or everything's falling apart.
The house of pain.
The reality, of course, is somewhere in the middle. Today, we finally took a step in the right direction. The market was, yes, mixed. Dow only gaining 100 points, S&P advancing 0.25%, NASDAQ declining 0.09%. Some stocks went up, other stocks went down, rather than the whole market marching in unison out the window. However, most of the stocks that rallied were what I call slowdown stocks, the ones that do well in a recession. Think the foods, the drugs, and the turbocharged secular growth stories that can transcend the entire business cycle, of which there are very, very few. That's a start. But it's hard to outrun the bond bears, aren't they? Aren't they hard? The people who look at plummeting Treasury yields and decide the economy's obviously headed off a cliff. Oh, they blame the trade war with China or the Federal Reserve's unwillingness to signal that they'll take action to prevent a serious slowdown. And you know what? Who can blame them? I'd love some reassurance from Fed Chief Jay Powell that he sees the fear that's gripping the markets, that he's willing to do something about it, that he wants to bust it. I would love that. So would you. We'd all welcome it. Maybe you could just give us some conjecture to explain why treasuries are rallying to insane levels. But if Powell won't do it, I will. Let me give you a hilarious tutorial about currencies and bonds, if you can believe there's anything funny about either of those things, so that you can understand why money's flying here. How easy it is to fly here from overseas, because it's gotten such a snap. All right, let's go back in the Wayback Machine to me with hair at my old hedge fund. Let's go back to August of 1991. All right, at that point, I was searching for some good ideas. I heard about an opportunity to buy Dutch bonds, the Netherlands, which were offering much better rates than you could get in the United States. Very similar to what's happening the other way now, right? Much better rates in the United States. To buy these Dutch bonds, I had to buy some of their old currency that was called the guilder. I had to trade that, I had to clear that trade, and then I could actually go into the market and buy the bonds themselves through a broker. What could go wrong? What could go wrong? I'd own the currency, then I'd own the bonds denominated in the currency and pick up some nice yield, better than I get from U.S. Treasuries. Make that cash, get a little extra interest. Sounded good to me. The trader I went to said it would take a little while to buy all those guilders. I needed $20 million worth, and then move that money into the bonds. I was trading out of my country house in Bucks County, Pennsylvania. I told the broker that my dad had just come in and we were going out for a bite to eat, so the trade had to be done lickety-split. I said I had to have it done by the time I got back. He said, hey, listen, man, that's not going to happen. I got to work. You can't just go out and buy $20 million worth of guilders. Give me a shot here. Now, Pop said we should go to Burger King. I agreed, because back then I had a much more cavalier attitude to physical fitness, to put it diplomatically. We took some time. We debated the fries versus McDonald's. We considered the cleanliness. All in all, it was a pretty good experience, frankly. We had it our way, so to speak. Or at least I thought. When we got back to the house, I called the trader expecting a report on my $20 million worth of Dutch bonds. Turns out I didn't have it my way. Not at all. Turns out, while we were wolfing down those old beef patties, there was a coup in the Soviet Union. A lunch coup! A group of hardline communists had seized the government from Mikhail Gorbachev, so every currency in Europe was plummeting. It was diving. They were getting crushed, especially, yes, of course, the guilder! Down more than 2%. That's huge for a currency just like that. Remember, it's the time you get a burger. None of that, bonds had shot up in price and down in yield as part of a flight to quality that happened so quickly that moron trader hadn't even been able to buy the bonds. I was stuck with the guilder. That special order cost me $400,000. It was supposed to be risk-free. It was supposed to be a gimme. Instead, it crushed me. I learned my lesson. Don't go buying no foreign currencies and foreign bonds, because you can lose your shirt. That special order really upset me. Of course, the coup ended up failing. The Soviet Union collapsed. The guilder regained some of its luster. In the interim, I took the loss. So what the heck does that have to do with what's going on right now? Well, listen up. These days, if you lived overseas and you wanted to do that trade, you know what? You buy U.S. dollars and U.S. Treasuries, because that's what's giving you that better yield. Of course, now, unlike back then, you can do it almost instantaneously, like pressing a button. It's as easy as giving the cashier your order at Burger King easier. And that's exactly what's happening right now. Investors in the rest of the world are using the easy ways you can do it now, are swapping out the debased euro and their lousy bonds with negative interest rates so they can have it their way in our market. Tens of billions of euros, reals, rubles, yen, whatever, zlotys are being translated into dollars and then buying anything for that yield. For me, it's a gimme. It's a gimme because why would you own government bonds in a weak currency with negative interest rates when you can buy our own government bonds in a strong currency, positive interest rate? It's almost too easy to buy our bonds. They are a fabulous bargain for them, even right here. Tomorrow there'll be a bargain. There'll be a bargain Monday, Tuesday, Wednesday. Until they get to zero, they're going to be a bargain. Now let's throw in a complication. When long-term interest rates plummet like this, it's not just a product of demand from overseas. It's also a sign of fear. Fear that we're going into recession. You've heard that before. At the same time, President Trump is arguing that we have an amazingly strong economy. After all, employment is still very robust. But simultaneously, he also wants the Fed to cut rates. We have an economy that's not strong enough. Obviously, the president has an aversion to admitting that anything might be wrong with the economy, even if that would help his case with the Fed. Although tonight he acknowledged that the consumer could have to cover some of these tariffs. Clarity. So which is it, a boom or a bust? You know what? I think that's an entirely false dichotomy. The truth is we're muddling along. The overseas markets are definitely weakening. We know that because Chuck Robbins, CEO of Cisco, told us this very morning, pointing out that July saw some cracks in the economy. But Walmart, the biggest retailer in America, told us that business is strong and the consumer is very healthy.
House of pleasure.
Trump stock.
The problem is there's always a contrary view. Yesterday, Macy's told a woeful story, truly dispiriting. I think Walmart's the better tell. Obviously, it's like a huge versus Macy's, but look, you're getting some mixed signals. And every day it seems to be a new scare. Today, a financial researcher working at the behest of a short seller, no less, took on General Electric's accounting, claiming that GE's headed for bankruptcy. This is the same analyst who correctly spotted that Bernie Madoff was a fraud well before his hedge fund blew up. So he's got the, let's say, gravitas. Now, he says GE has lied about the exposure to these hard-to-value long-term care contracts. CEO Larry Culp, who just bought a ton of stock, heatedly disagreed, but stock got hammered anyway. Any day someone with an ounce of credibility comes and claims that an American icon is committed fraud, well, that's going to frighten people. This stock was down the most in 11 years, single day. Look, I have frequently criticized GE for the way it accounted for long-term care policies, but I'm confident that Culp has taken aggressive steps to be more transparent and reserve enough money to cover the costs. However, as I have told GE management many times and told you, with long-term care policies, you can never reserve too much, which is why the criticism resonated. It always will. That's why the stock went down 11%. Still, Culp's accusing the guy of market manipulation, and can you blame him? Can you blame him? Unfortunately, this issue isn't going to go away anytime soon, and the false dichotomy isn't either, which is why the stocks that do well in a recession are now rallying. Kimberly-Clark, that stock is, without even doing good numbers, the stock is up 25 straight points. Procter & Gamble. Meanwhile, the big techs and the industrials are getting hit. Too much exposure to the global economy. Bottom line, as long as Treasury yields keep plummeting, investors will remain unsure of themselves. At least today, they finally found some stocks to buy along with bonds. It's just that they're the wrong stocks, the recession stocks, not the kind of leaders we want to get behind. Zach in Florida. Zach!
How you doing tonight?
I don't know. I just seen that Larry Culp put another 252,000 shares of GE today. That makes me feel good. What's going on?
Hey, I just want to give a shout-out to my brothers at St. Carlos Park Fire. We all love watching your show.
Thank you. Thank you, the bros.
Yeah, man. Hey, my question's for Caterpillar.
Yeah.
The stock is down from a 52-week high of 159. Do you agree that it is undervalued?
Yes, I do. Strong? But you know what? I got egg all over my face. I mean, I got hollandaise sauce on my face. That's how much I like the stock, and I've been wrong, and it's driving me crazy. I bought it for the charitable trust. I always play with an open hand. I brag about the winners. Well, you know what? If I could hit myself over the head with a hammer because of this Caterpillar, I would. The stock, I think, is cheap, but I think it's going even lower. I never sit down. Cat made me sit down. Let's talk to Dustin in Virginia. Dusty.
Hi, Jim. Booyah. Thank you for taking my call.
No problem.
So DXC Technology, they beat projections last quarter, but they lowered the future guidance, and the stock fallen considerably. Is this a buy or is this a hold?
Don't you buy that stock. Don't you dare. That was one of the worst quarters I've seen. I don't know. Imagine when to come on and explain it. I think in the end, I'd still say that was a horrible quarter. Why do you even go? That's like why don't we go swimming in the Love Canal, pick up some DXC? Okay? Am I clear? Am I clear? That was a bad quarter. And I don't mean any insult. They're all really nice. Brad in Tennessee. Brad.
Hey, Jim, how you doing? Good afternoon.
I'm doing good. I'm doing good. How about you? It's actually doing well, my mother would say. What's up?
This is true. Hey, quick question. I'm 56, looking to diversify my stock portfolio and hopefully retire in 9 years.
Okie dokie.
I currently own Baxter stock through an ESPP, and I'm interested in liquidating some of that Baxter stock and purchase Tilray.
What?
My question
You're going to
is,
sell Baxter to buy Tilray?
I don't know. That's what I was considering.
No, you're not. You're not going to do that. No. You can buy a second-rate cannabis stock and sell a first-rate medical stock? Not in my house. Come on.
Cool.
Hey, Chief, listen. We like quality. If you're going to sell Baxter, you can buy some Merck. But Tilray? I mean, Tilray? Hey, Cheech, hey, Chong, let's buy some Tilray. All right, sure, we're in a time of uncertainty, but today the market took a step in the right direction. I like those callers. I'm not trying to be too glib. On Mad Money tonight, after a rough few days, few guests are better equipped to opine on the health of the overall economy than the CEO that joins me tonight. Do not miss my exclusive with the CEO of Waste Management. No trash talk, though. Then, with so much talk about a potential recession, wondering where to put your money if the whole thing goes kerflooey? I've got a new one for you. And with so much uncertainty in the market, searching for positive stories you have missed, I'm eyeing Tilray. Just kidding. I'm eyeing AMN Healthcare. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.